Good morning, everybody. Thank you all for coming. Another episode of Coffee with Friends. We have a new person joining us today. We're going to call him J2. Is that okay? James Easton from the UK. He's done videos and collaborations with Raoul Paul and others. We have Marty Party and Mando. Lots of M's in the room. M's and J's. They're the two key letters.
M's and J's. J's on the left, M's on the right.
Exactly. So it's been a crazy 2 weekends in a row last week, but there are some good signs of resilience. And a lot of people are very worried about everything like oil. And this one today is called the macro wrecking ball. But before we jump in, let's start with you, James. Can you give us a 30-second backgrounder? I know you're a former vet.
Yes.
And everything else. And what's with you and Bitcoin? Why does a former vet get completely enamored with Bitcoin?
Well, do you know what? It started basically the army wages aren't the best, in case you haven't heard. And it sort of got to, I knew I was going to leave the army eventually, and I was looking at savings and things to invest in. And Bitcoin just seemed like the most plausible thing that was giving the best returns at the time. Maybe not at the moment, but hopefully that changes for the rest of the year. And it just jumped out at me as the most reasonable thing to get in, and it was so accessible.
Yeah, and Rangers are hard-ass guys, and they have courage under fire. So things like Bitcoin volatility doesn't bother you?
Yeah, it's all right. We just look for opportunities amongst the chaos.
Awesome. Thank you for that. Mando, how are you this fine day?
Yeah, good. It's been, a slightly frustrating week. I really felt like we were about to break out when we went above 71K and then kind of got rugged, which, it could just be natural, like us staying in this range for a little bit. But it does feel as though macro has definitely taken a leg higher in terms of volatility with this move in oil, and people having a very wide range of takes when it comes to what the impact is going to be on stocks and bonds and over the medium term. So I think we're in a world of like heightened macro volatility. In some ways, crypto has survived pretty well in terms in terms of result. Like Bitcoin still to be where it is with this move in oil and this move in stocks, I think it's a bit of a win. But yeah, it was slightly frustrating for it not to be a full breakout.
Yeah, we'll break that down as well, because that resilience has been kind of eye-opening for me. And we'll look at a very interesting chart too in a second. Marty, Mr. Party, what's going on in your world?
All good. Thanks, guys. Great weekend. Yeah, I agree. Bitcoin just dipped down into the accumulation zone again, but shot right back out of the 68,800 level that I say is the top of the accumulation zone. So seems like crypto up, stocks down across the board. Markets internationally really took a hit on the oil price, hitting $115 yesterday. And that's going to be obviously the biggest story. But crypto's resilience once again. I think everybody expected it to dump hard and shorted, and they got wrecked. So let's see. Interesting things happening as well. We'll get into those. But yeah, overall great. I'm very proud of Bitcoin once again. It's holding in that logarithmic weekly.
And you mentioned something there, Marty, as well. My kill zone for Bitcoin is 63 to 64K. It's a nice place to nibble. It seems like you see the same thing. And maybe
I nibble
James,
between 58,800 and 68,800 on nibble weekly.
Yeah. James, what do you nibble at?
I nibble at 65K or lower.
There you go.
Yeah, so nice. I'm in good company.
And we know Mando likes the major Tom, major Bitcoin over others. We got lots of great news. Let's get into the story, because this one's called the macro wrecking ball. And I don't want the title to sound scary, because it's actually not, because we know what happens during times of war, etc. It's basically QE, money printing, etc. And there's wild things happening with guilds in the UK, and then the ECB saying they're going to cut rates. I don't actually understand that. We'll try to get back to you, Mando, on that one later. But so far, Bitcoin is up 3% in March. Actually, it's 3.5% now, because it's just shot up another $500. So we're up 3,500 for the day, up 5%, despite the craziness. And I want to talk about this. This is Bitcoin versus oil. And oil is a commodity. A lot of people call oil black gold, Bitcoin digital gold. And over time, Bitcoin has smoked oil. But when you look at this precipitous fall that we've just gone through in Bitcoin oil just over the past 100 days or so, it is historic. We've never seen such a massive 40% plus dip in such a short window of time. Comparing this commodity, digital energy, no, comparing black gold, oil, to digital energy, Bitcoin. What do you break out from this, Mando, when you look at oil, the global dependence? There's pretty much, you can draw almost a straight line between every war and every situation in the world back to oil. Is there any relationship with Bitcoin?
It's difficult because I think what you've seen over the last week, 2 weeks even, has been correlation across all assets has gone up. And it's all the reverse correlation to oil. So oil is going up. And when oil shoots up, we see stocks go lower. We see bonds go lower. We see metals go lower. And we see crypto go lower. I haven't seen that sort of reaction for a long time. But to see days where gold was down, stocks were down, crypto was down, and bond yields were higher, you don't normally see that. So, and I think that's just the initial, first move. Correlations do tend to increase in these sort of a shock. I would still say that on the back of a shock like this, which I think we could be in a situation where this war continues for the next couple months before some form of a deal is done. The other assets, I think, have a much worse case than Bitcoin. Like stocks in that sort of a world where, let's say, oil is staying 120 to 150. It's not a great trade for the AI trade. Bonds, I also think, could fall because you have a world where inflation starts to get worried. Maybe, yep. I don't think it's going to be sustained. It seems more like a supply shock, but bond yields will go higher. And then gold and silver, it's a little bit unclear. Like you could say that gold could potentially go higher. But for Bitcoin, I do think that it's a good crisis asset to own here. And you're seeing that. Like you're seeing that it's outperforming. It's outperforming on these sort of days. So on a day like today where stocks fell and got oil's high, you started to see Bitcoin actually edge slightly higher. So I think this is a world where Bitcoin could actually be one of the strongest assets over the next couple of months.
Yeah, for 5 years now, I've been saying Bitty loves a crisis. And typically, initially, in the first few hours of a crisis, it falls because it's considered a risk off. But then, for other reasons, it goes up. J2, what do you make of Bitcoin versus oil?
Well, just piggybacking off what the Baccamando said there, in terms of Bitcoin in a crisis, there was an interesting chart on Twitter. I don't have it to hand, but it showed exchange outflows in Iran when this conflict kicked off, went absolutely parabolic. So it is good to see that people are treating Bitcoin now as a safe haven asset. You know, if they need to flee the country for whatever reason, people are seeing that as the go-to thing. Try moving $1 billion worth of gold. It's going to take some time, isn't it? But
yeah, this is not a hardware wallet. It's a garage door opener, but you get the idea. Yeah. Yeah. They were selling, they sold out of those things as well, apparently on the ground in Iran, but people did exactly that. So risk off for sure. Yeah. And we're going to see a lot more of that as well. As fiat goes to zero in different countries, we saw the Iranian currency go to zero, 4 months ago, 6 months ago. And the Bitcoin is the logical choice for all those lands, all those countries with very frail fiats. You agree?
Yeah, I would agree.
Yeah. Marty, what do you make of all of this? Is there anything you can see here with black?
Yeah, I have to agree with James. I think that Bitcoin is the great life raft. This is its use case. Whenever there is conflict, any kind of geopolitical risk, people need to move. Look at people in Dubai. I mean, I know lots of South African billionaires and millionaires that moved to Dubai. They're all moving back. What do? When they left South Africa, they used Bitcoin to move their money to Dubai. Now they're using Bitcoin to move their money back to Singapore. This is what Bitcoin is. It's a parallel universe. It defies gravity. In times of risk, it's the go-to, and we're seeing it again. And I think every time anybody does use it for that, they stay in it. They learn about it, and it gives you a sense of confidence. And that's how we grow the floor. And in my opinion, the floor is growing.
Yeah.
Especially through these geopolitically rough times. This is when Bitcoin shines at the end of the day. So
Yeah.
I kind of agree with James there.
Yeah. About 2 weeks ago, I opened up a can of worms measuring the compound annual growth rate for Bitcoin over different cycles. And it's obviously going down. We technically didn't have a bull market per se last time around. But the question is, if the CAGR, you can see here, halved every cycle, was 102, then it went to 36. And remember, 36 CAGR is many hundreds of percent over a 4 or 5 year period. And then last time around, about 16%. We're going kind of from top to top. If that continues and the CAGR gets halved again, we could be looking at 7 to 8% compound annual growth rate for Bitcoin. I always say, if you're not making 14% on your assets, it's not worth it. Mando, to you first. CAGR, does it concern you? And at what point would retail lose interest if, going back to what J2 said at the very beginning, coming out of the military, he needed a fast horse? Is Bitcoin still the fast horse?
Look, I think you could have looked at different time periods for gold in this sort of same sort of thing and been like, oh, it's such a boring asset. But Bitcoin, I think, will be an asset where it suddenly shoots up in value in times like this when there's a crisis. Yeah. So it's one of these ones where, depending on your time period, I think you could probably pick a low volatility, low return sort of period. But there's going to be some period where it goes up and everything goes down. And I'm kind of in the world where we have already seen some of this. Like, there's no doubt that returns of this market have gone down, but that doesn't stop there. The idea of it being a parabolic rise at some points or in periods over the next 10 years, as we start to see this kind of fiat system / debt system kind of come under strain. So this is the exact sort of scenario I'd want to own Bitcoin for. Even right now, like, there could be a day here where Bitcoin just absolutely soars on the back of a situation like this. So I do think that part of this is true, but it's also the sort of asset that can be inversely correlated to all the other assets in your portfolio, and that's kind of why you own it.
Yeah, my counterpoint to this: if you're buying Bitcoin at 15,500 or 16,000 back in 2022, you're sitting very happy right now. But it's all about how you layer in and what price you stop buying and what price you start buying and stacking. I totally agree with you. I'm kind of playing devil's advocate here. And I think because of its hardness, it will pop one day. We just don't know when that day is. Marty, what do you make of all of this?
Yeah, I think that's like Mando says. But if you buy at the right time, you can always get the most gains. And the question is, when is the right time? And the right time is now, at the bottom of a bear market. I mean, this is when you buy, when people are fearful. So I think the Bitcoin returns are just about to shock people. In my opinion, the escalation of global tension is the rise and the expansion of Bitcoin, in my opinion. In good times, Bitcoin tends to sell off. In bad times, Bitcoin tends to go up. And I mean, I agree with Mando. I think this war could go on for months. And I think Ukraine, Russia is heating up. Pakistan is heating up. The world is going into conflict. And this is when this asset will shine. It's the only true non-bearer asset in the world.
Yeah, the world is definitely a tinderbox. We have so many forces all happening at the same time. In fact, J2, for you, considering your military background, when you look at what I call the tinderbox all over the world, conflicts everywhere, nobody's really pushing for peace. And then you have other forces. You have fiat going to zero. You have the AI asteroid about to hit the planet. What do you make of all of this? And how bad could it become? And is this part of the fourth turning?
Well, I think when you look at conflicts, particularly what's happening at the moment, when we look back, as history does often repeat, hopefully not this time, but the initial Iraq invasion was only meant to last 3 to 4 weeks.
Yeah, 8 years, wasn't it?
And we saw that go on for nearly 20 years. So hopefully, I'm not saying we're going to get another 20-year conflict here, but it's always worth thinking about that these things can drag on a lot longer than we expected. So that's just something to keep in mind. But just jumping back onto the Bitcoin bandwagon, it is going to be the life raft that I think a lot of people are going to gravitate towards when things like this happen.
Yep, exactly. And then I guess funny, Anderson here talks about the Gray Swan number 7 so far this year. And I've been tracking them all. And yes, we've had 7, but we've had no crazy capitulation in the market either, which tells me there's a lot of money on the sidelines. But let's move forward. We had some other big news coming out today. Let's forget this one for now, but this is huge. MicroStrategy bought 18,000 Bitcoin. I had a feeling they were going to be able to buy a lot from the STRC issuance, estimated to be about 3,000. They pulled in about 4,000 or 5,000, as I recall, from STRC, which is large. But when you consider one player buying, how many days of issuance is that? 41 days of issuance in one fell swoop. And now they have 740,000 Bitcoin. And as I always say, there'll never be more than 15 million Bitcoin. So they have 5% of the supply. Are they getting too big, Mando? Is there a systemic risk of Michael Saylor buying too much? You know he's going for 1 million Bitcoin. And he has the ChatGPT/iPhone moment with STRC. Everybody is loving that 11% plus yield. Insurance companies who are super conservative. Does this concern you, Mando?
So just how STRC works, obviously he's been increasing the interest rate on this product, and once it gets above a certain level, he's able to issue more stock and buy Bitcoin. So it's a big focus for the market right now to see where this is trading and the trading volumes at that sort of level. The idea of a huge amount of Bitcoin being bought at 11.5% interest rate doesn't thrill me. I've continued to say that I prefer pure equity issuance rather than issuance with this sort of a dividend payment. I've always thought that Thaler played an absolute blinder, and he kind of, I remember saying this a year and a half ago that I didn't think he should keep buying. I thought he should just stop. He had such a good trade. I am not a huge fan of him buying with this sort of a vehicle, but I do think it's still going to be a high risk, high reward trade. Like if Bitcoin doubles, it'll do absolutely fine. I just don't love the amount of Bitcoin being owned by somebody with this sort of a liability.
Yeah, actually, with this big buy, he's actually reducing his cost basis. His average cost basis is 76,000, if I recall, and he bought this bag at 70 grand. So he's bringing his cost basis down. The question is, he said once in an interview, I found it very profound a few weeks ago. He said, if people knew what I knew about Bitcoin, it would be at $1 million right now. And that got my attention. Like, what does he know that we do not know? Anybody? Marty? Like that? He's just buying hand over fist with absolute abandon.
Let's just go back in time. I believe there's a larger strategy. He named his company Strategy, but I believe there's a lot of larger strategy with Bitcoin to do with the U.S. government. And you saw their cyber security report that came out last week, and crypto and Bitcoin is included in there. That was an executive order. I think that Marcus Saylor knows the same thing. I think that this is a strategy to accumulate and reprice. We're going through a commodity cycle. Bitcoin is probably the ultimate digital commodity. I think we're going to see the same thing. Out of nowhere, there'll be a massive repricing. And so I think he's scrambling. He spent 1.28 billion, right, on buying another 18,000 Bitcoin. Same as BlackRock there at 774. So they're neck and neck, looking like a race to 1 million, right? Coinbase has 1 million. BlackRock now 780,000. Strategy 783,000. We also saw the U.S. government once again another executive order to chase pig butchering, fraud, and seize more Bitcoin. I think there's an underlying current to accumulate this commodity and reprice it, just like they did with gold, silver, and oil.
Yeah,
and I think that's probably what he's lined up with.
Yeah, I kind of like Mando's take. Mando, you being conservative, but I also know big picture what's around the corner. You know, if you know something is going to go to 140K, you're going to buy the hell out of it at 70K. J2, what do you make of all of this craziness, and which side of the argument, Mando or Marty, do you sit?
I'm a bit on the fence with it, if I'm honest, but I tend to lean towards Marty, because with this accumulation, that there is, excuse the pun, but a strategy behind it. I can't imagine Sailor just keep chucking money at this thing without. I don't see it as blind delusion or blind conviction. I think he must know something. But on the flip side of it, if things were to go a bit wrong, per se, I know obviously said in interviews before, Bitcoin could drop to sort of, what was it, 8,000 or something like that before they have to worry. It might have been the strategy CEO that said that. So I don't think Bitcoin's not going that low, obviously, but I think the only time it would get a bit messy would be if strategy ever needed to sell some for whatever reason. And I don't think they will, but just to play devil's advocate, if they did, if people saw Bitcoin moving out of those strategy wallets, that could cause absolute chaos. But I don't think that is going to happen. It's just
he said he's never going to sell, and he's always going to buy the top. And he seems to be a man of his word. I believe he is, and his conviction is like nothing before. Because remember, he wasn't a believer of Bitcoin in the past at all.
Exactly.
It was C19 that opened up his eyes.
Yeah.
But the whole idea of literally changing how money works, like if you look at the credit markets and the preferred markets, is massive. You know, there was a cool, I think it was something Adam Livingston said, well, we all estimated he'd buy about 3,000 Bitcoin this week. But what happens if the day comes where he's issuing enough STRC to buy 30,000 Bitcoin a week? He has, this is the crazy thing that I see, he has the ability to be the perpetual bidder for Bitcoin, and he has enough capacity now to drive the price up himself alone. That for me is the calculus I don't think many people are thinking about. Any thoughts on that? Mando, you're a TradFi guy. You know where I'm getting at here? Eventually, the sellers will disappear if he continues to buy at this level.
Yeah, so I think my take is still is tapered by what you said. Like he's not buying at the highs right now. He's lowering his average price, and he this seems like a far less risky time to add some leverage than at, you know, with Bitcoin down 50% than other times. So like he could, again, if he accumulates at this sort of time, play another blinder. You want to be averaging down if you're going to add leverage. So if there's any time to add leverage, I think it's not a bad time. That being said, like I'm not a big fan of 11.5% coupon buying Bitcoin. I do think that going on to your other point, just like how big the bond market is, it is massive, absolutely huge, much bigger than the stock market. So there is going to be a lot of different pools of capital that can come in and buy a piece of paper like this.
Exactly. And that, if you look at the map of global assets, $900 trillion, and you got the little spot in the bottom right corner of Bitcoin, there's a lot of room to grow. And all he has to do, it's for me, it's always been since 2017, it's a waiting game. You know, what was it Satoshi said way back when, if this catches on, it's worth getting some in the early days. So we still need that catching on. We thought it was going to happen with digital asset treasuries, but it didn't. Anyway, let's move on. We have other things happening in the world of crypto. And JTO, I know you're a big Bitcoin guy, but do you look at other things like layer ones, etc., in crypto?
I do, yeah. I love my Solana. I love ETH as well, but they're both on par with each other. But to see what's happening with Solana, I mean, especially with the Circle issuance. I always see Marty almost every day. It's like another 250 million have been minted, and you think, flip it.
That's to me the most important thing right there.
Yeah,
Stable
and it's been reflected today as well. Like the Circle stock today, I think hit at $111, and just a few weeks ago it was at $53. So,
like it actually, you take me down a rabbit hole there with that thought, J2, and I'll kick it back to you guys. The bottom of the bear. First of all, this bear happened extraordinarily fast. Caught a lot of people offside. You know, I was planning for years to be able to hedge it, and as I'm watching, it's like it's holding above 100K. It's holding above 100K, and then straight down. Boom. It's like, damn. Anyhow, what is interesting is if you look at previous cycles and you look at crypto stocks, the Coinbases of the world, the Circles of the world, MicroStrategy, even back in 2022, people thought the game was over. But when these things start turning around and going up, that's your first canary in the mine that crypto is alive and well, and we're past the worst. Does anybody look at that here? So if you look at Circle going from 60 to 110 bucks in a couple of weeks, Mando, to you first, could that be a sign?
I am super bullish on the use of stable coins and tokenization. I think Circle's becoming it's interesting to see that come back, because it was like a down only after the IPO. Well, the IPO popped and then just like bled out for a while, but people are getting very, very bullish on this sort of space. And whenever there was another crypto payments company that raised Series A, I think $600 million today. Like this is where the money in crypto is pouring in. I'm not going to change my view around the L1s. That I still think they've been challenged in this new world. Like if you go onto Hyperliquid right now and you look at the most traded pairs, it's tokenized RWAs or stocks make up the majority of the top 20. So I think we're now in this sort of world where people are everything's moving on chain, and that's making it more difficult sometimes for these L1s to portray why they're valuable. I would look at Hype right now. That's what I would look at if I was looking at L1s. Just huge volume going through it every single weekend. It's becoming the place to trade for TradFi and for crypto 24/7 in times of huge amount of stress. And I look at that and think that Solana's FTV is now 55, Hype's is 34, 33. That compression has come down a lot, right? Solana's at 100. I think I still like Hype. Hype. I like Hype versus ETH more than I like Hype versus Solana.
Yeah. But, what's interesting about Hype is so few users. It's like 12,000 users, but they're moving massive amounts of money. So there's no widespread adoption, not like the 6 million users on Solana. But these just big bankers, big ballers.
If they're making that amount of money with that amount of users, it tells you the potential of an app like that. I think it's interesting to see that Totally has now moved into trying to build a perp protocol, right? Like, it's very clear that trading venues on these L1s and the value capture somehow being also at the L1 level is very important. I'll be interested to see what Solana does there.
Yep, exactly.
It's huge. And I think. Sorry to cut you off there. I think oil futures on Hyperliquid has just hit $1 billion in volume as well. So
yeah, in fact, they were 2 weeks ago. They were trading gold futures as well, if I'm not mistaken. So it's all of TradFi is not just, they're not using this platform on crypto to trade crypto. They're trading other stuff, which is incredible. And that takes us to this tokenization of the world, which is coming fit fast and furious. But getting back to this, let's close off on this point here. Solana has overtaken Ethereum and Tron. Tron was the 800-pound gorilla in stablecoins. It's all the chain pretty much does is stablecoin transactions. But they processed nearly $1 trillion in stablecoin transactions. And that is insane. I think global monthly volumes are above 2 trillion. And you got the TradFi players, again, Visa, Stripe, WorldPay, all using Solana as their rail for these payments. Marty, I know you track this incessantly. tell us how big this is, and tell us about tokenization too, because that was another flippening that just happened.
I mean, in my opinion, tokenization is the big use case that will bring massive crypto adoption. I mean, it's clear at an institutional level, that's the primary focus right now. Remember, stable coins passed in the Genius Act were just tokenized debt. That's all they really are. I mean, the US dollar is just tokenized US treasuries pretty much. So they've tokenized debt, and that goes live in 2027, making a lot of contention in the Clarity Act because banks are at risk. You saw the front page of the Wall Street Journal I sent to you today. People are taking note. Stablecoin is going to be integrated into the economy. And then the next will be tokenized equities. And tokenized equities, together with the parallel of agentic finance, human users do very few transactions a day. They do 5 to 10 transactions a day. Agentics will do thousands, hundreds of thousands. So I don't think we've ever really tapped the surface of tokenization. The rails will be, massively scaling, and it's all about who can support that. And I kind of agree with Mando. I think Hyperliquid has surprised a lot of people. It's remained dominant. It is definitely a venue people choose, but don't count out the new Phoenix perpetuals on Solana. Remember the Ellipsis Lab, which is probably the strongest development team in the industry, as competent as the Hyperliquid team, from a purely technical level and staffing level, skill level, experience level, have been building quietly Phoenix perpetuals under the covers on Solana, and they've just announced their release date. And I think that's going to be truly a great moment for crypto, because you'll see a true competitor to Hyperliquid coming off Solana. But I think tokenization is the big use case. We see Solana overtook Ethereum and Tron on stablecoin transaction volume, which to me is almost the most important thing. 650 billion in February, people. Nearly $1 trillion moved on USDC on Solana in February alone. That's double the previous peak. So clearly there's this massive liquidity shift towards, low fee, high throughput rails for payments and transfers. Remember, institutions also like fast, cheap transactions, not just retail. So they're going to go there, and Solana never had the liquidity 2 years ago to compete with Ethereum. It's catching up extremely fast. I post every stablecoin issuance on Solana, and it's growing at an unbelievable rate right now. And then real-world assets, right? Real-world assets. Solana just surpassed Ethereum in number of wallets holding real-world assets. So on both avenues, it seems to be dominating. Now, people will say, why doesn't the price reflect that? And, I'll go back to telling you that the price is a different closed loop. It's not detached from fundamentals, and it will soon catch up to fundamentals with regulation.
Yeah, the price has been very disappointing, no doubt about that. But just like when it fell to $8, the fundamentals were very strong. So let's go around the horn here with a quick question. The three big use cases for crypto that I see: stablecoins, tokenization of everything, and perp dexes. Which ones are most important? Rank them for me, starting with J2.
Reel them off again, please, James.
Tokenization of everything, stable coins, and perp dexes. They're the three money spinners in crypto right now.
I think stables at number one, I would say.
Okay.
Stables.
The perp dexes already make all the money in crypto.
Yeah. I'm just
literally the two big money spinners of all of crypto are Solana and Hype. All make their money from perp dexes right now, sadly, which is bizarre. It goes to Manda's thesis.
I think the tokenization is going to be huge eventually. And then probably perp dex is third, although they're probably leading the race at the minute. Maybe a joint first with stable coins.
Yeah, Manda, what do you think about those three? Rank them. Like 5 years down the road, what will be the largest versus smallest of the three?
It really depends. If you're just talking about revenue, I think perp dexes add a product just because of the way that they are, and you have leverage. They're always going to make a lot of money. If you're talking about TAM, I do think tokenization could be huge, but it's probably, if you're talking about just stable coins, then I think that will be the majority of what the RWA space is. So I reckon stable coins will be the biggest.
Good. Marty, 1, 2, 3.
I mean, a couple of things. First of all, remember, we just mined 20 million Bitcoin. We didn't mention that earlier in that previous conversation. That leaves around 1 million Bitcoin to be mined. So I think there's a race.
15 years.
I think in 15 years' time, stablecoin, first of all, stablecoin only becomes active in 2027. The Genius Act passed it in 2025, but the January 1st, 2027 is when it becomes active. I believe it's going to 100x overnight and change the entire landscape of crypto, 100%. Everybody will use it. Visa, MasterCard will use it. Banks will use it. The Fed will probably use it. It's going to be part of our lives. So as far as how that relates to token prices, we don't know yet. I mean, I think it's part of regulation. But I think tokenization of everything will be the primary use case of crypto. I think decentralized perps was a thing, kind of like a meme coin cycle. It was a cycle. I mean, there's still the argument, do you want people to know you've got a massive $1 million position? So, the whole CZ argument of, transparent perpetuals is a good argument. A lot of whales want you to know that they're 40x, Ethereum at 1,800 with $1 million, but a lot don't. And I think there'll always be a sort of opaque, centralized, perpetual complex. And I think the big difference will be regulation. Once they regulate those exchanges and there's consequences to things like wash trading, trading with customer funds, etc., honest order books, things like that, I think that there'll be a bigger move to highly liquid venues for these massive perpetuals moving off hyperliquid. In my opinion, we'll see. And so that depends on regulation. Once again, guys, I see the entire market as two markets, before regulation and after regulation. And I think these Monday shows will be very different post-regulation.
Yeah, and in fact, speaking of regulation, a lot of confusion out there about the Clarity Act. Back to you, Marty. The Clarity Act will bring huge amounts of money to crypto. No ifs, ands, or buts. But is it only U.S. money? What happens to the rest of the world? Will the rest of the world copy this blueprint for their own regulation? How do you see this playing out?
I think just, first of all, I mean, I think the whole world is still on a dollar standard. So this giant push by the US to put digital dollars into the world, which is in effect right now, has just amplified that. I think crypto has become very dollar dominated because of Tether and USDC. And so you can't argue that. But look at the Bahamas, look at FTX, the power of the US through political means and political pressure, with sanction pressure, economic pressure, political pressure. Everyone always says to me, yeah, we can regulate the US markets, but how are we going to regulate the Chinese markets? How are we going to regulate the EU markets? I think once the US makes regulatory change, it'll iterate through the world very fast. I think everyone will copy. How long it takes, people ask me all the time. I think between 6 months to a year after they pass, Trump signs Clarity, I think we'll start to see the changes in other nations. We're already seeing other nations jump ahead. Thailand, the East, Japan have already got EU, MICA. They've already got their regulations. They're waiting on the US. So it's all about the Seychelles, in my opinion. Okay, you know who I'm talking about.
Yeah.
Well, if you look at, I mean, nobody can argue this. Go to top crypto derivative exchanges today over 24 hours. The Seychelles, Binance has $54 billion in volume. The second place is OKX at 24 billion. And by the way, they just signed a deal with ICE, right? Intercontinental Exchange. That's a New York Stock Exchange. So that's an interesting development we need to follow. Yeah. But if you look at the regulated exchanges, Coinbase is off the top 15 right now. It doesn't even enter the picture. It's like 7 billion. Hyperliquid even doesn't even mention. It's 5 billion. Binance is 55 billion a day.
Yeah,
that's $20 billion of bets every day. Until that is regulated, crypto prices, there is no market. Binance makes the market. And so that's what we'll watch. And we'll watch that slowly over every Monday to watch that dominance.
We'll see if CZ will bend the knee, as they say, as we go down the line. J2, this is interesting. This is breaking news. Nigel Farage took a 6% stake in Bitcoin treasury firm Stack Bitcoin. He is, I don't know anything about politics, let alone UK politics. I do know he wants to be the next prime minister. What did you make of this?
He does. He's one of the more popular ones as the media spinning it as if you're more right wing leaning.
Okay.
He's had a few chats with Trump in the past. I believe they're fairly close. And he is very pro crypto. I believe he actually took some donations in crypto, and the UK government didn't like that. So I think they've tried to put a stop to it. But I mean, if he gets in power and he's pro Bitcoin, that's a positive for crypto in the UK, because at the moment it's fairly bleak.
Yeah, Amanda, you probably know UK politics quite well. Is that a long shot for somebody from the right to take over what could be construed as maybe majority socialist country, or have people had enough already? You might be muted.
The current government is a Labour government. Before that, it was, I think, nearly 2 decades, around 2 decades of Conservatives. It looks like Keir Starmer is like holding on at the moment for his own role, but that wouldn't necessarily trigger a general election. But what I would say is that the reason why this is happening is because crypto, just like with Trump, is a huge tool here for funding campaigns. So if you're going to fund your whole campaign and you're going to make yourself pro crypto, of which the UK has not it's done some things, but they're not necessarily the most pro crypto. They've just brought out regulation, which is actually rather restrictive. There's some talk about right now of them pushing through a £10,000 stablecoin cap for single ownership. So I think this is a smart move. He's definitely amongst the favorites to win the next election.
Oh, interesting. Wasn't on my bingo card. All right, let's get back to our agendas. This is another little piece. Well, we'll get to the wrecking ball in a second, but I'm seeing a lot of grumblings around credit markets. And when the credit market hits the wall, that can result in a very quick, rapid dissolving of everything out there in the market. And a lot of people are now talking about this. This could be the next black swan.
I'd love to hear about that from you, James. What did you think of that BlackRock thing?
I haven't seen the BlackRock thing, but I do watch the amount of puts that are being bought to protect themselves from the credit blowing up, and that's at a record all-time high over the last week. So a lot of big players are extremely nervous about this hitting the wall, the whole CDO blow up like we had in the GFC back in 2008, 2009. But Manda, bond markets, credit markets, that's probably the best of all of us here. This is something that I'm seeing the cracks in the system all over the place. And we've had a lot of big lenders, private equity lenders blow up. And then we have the huge AI investments, which are going to trigger, they could take companies like Oracle down, like OpenAI down. It is, again, everything is connected, but it's a house of cards. What do you think?
Yeah, I used to be a trader of high yield and distressed credit, which is basically companies which are close to bankruptcy or going through some level of distress.
The riskiest of the risky.
Yeah, and that was in a world of money printing. And what I saw towards the end of my time as a trader at a bank there was you saw private credit funds come in, and they would do deals that no one else would do. Like deals which was like, this company is in real trouble. Some private lender would come through and do a deal that no one else would do at a very high interest rate. And often the idea is that you were just getting bailed out by money printing. Now, I left, and in the time that I've left, you started to see interest rates go up, money printing has stopped. And then this year, you've also had the final kick is from AI, which is disrupting a lot of the high yield and distressed world. So this was actually like known about for a while in credit worlds, that like these companies, the big private credit funds, were doing deals which were just not going to last a full cycle. And for me, they're just like, the chickens are just coming home to roost at this stage. Normally you do these deals with a 4 to 5 year term on a loan or a bond deal, and deals that were made in 2021 are probably now coming to maturity, and everyone's realizing that, this is a part of shit. So I think these funds are actually just are only starting to reveal the losses that they are taking. Often the debt that they took on is like it's payment in kind style debt, or it's junior, and it's going to be a bit of a mess. So, but it's nowhere near the scale of the US housing market. This is not 2008, where it was the biggest market in the world, plus a derivatives market that made that 5 times bigger. This is a pocket of the credit market, probably in the hundreds of billions, but not in the trillions in terms of size.
AI alone is gunning for $1 trillion over the next 3 years. So there you get your trillion from that one sector.
Maybe, I mean AI trade is slightly different. I'm just trying to put into scale. When the US housing market went down and then took down various other housing markets around the world, it was the biggest market in the world, with a derivatives market that made it 5 times bigger. The private credit market doesn't have a derivatives market as part of it, almost at all.
Yeah.
They do have CLOs, but that's not a derivative. It's just a different way to package it. But it will cause some pain, and you start to see people, like you said, hedge the high yield bond market on the back of it. But I don't think it's the same scale.
And one thing for people not to be alarmed, because the way this thing evolves, it happens very quickly. Like risk happens super fast when a credit crunch appears. But then the same thing that'll happen within 24 hours, those crazy money printing and easing will go into high gear. So what happens is you get this short-term capitulation, markets tank, and then V-shaped recovery, and then off to the races for the next 6 months or so. Mando, you agree with that take? No reason to be afraid?
Yeah, I mean, I speak to, obviously I've got a lot of ex-colleagues who still trade this market. And, last year, although there were bankruptcies were going higher, like generic credit risk was quite low in the space. AI is can really affect this. So what you've seen this year is a big increase in credit spreads and just general worry in the market. So I would say that this is the most stress I've seen in the credit market for a few years. Yeah.
Marty, does that answer your questions?
Yeah, just for people out there to understand, private credit is around 2 trillion, Mando, all right? The size of the private credit market?
BlackRock, I wouldn't say that these funds.
I
wouldn't say that that's publicly traded. Like, as in, that is not the amount which is at risk here. Private credit is massive if you include all forms of private credit. But if you talk about the ones
just to give you an idea of people, U.S. housing is roughly, I think, 55 trillion.
Yeah.
And U.S. bond market is roughly 50 to 55 trillion. Very similar size. So it's substantially bigger markets. So to me, the real systemic risk lies in either housing or the bond market still. Private credit. I mean, that thing happened last week where retail investors try to redeem 9.2% of BlackRock's private credit fund. And BlackRock said no and capped it at 5%, right? I think 650 million was withdrawn. So that was quite a scare for private credit. But it seems to have been, narrated well. 620 million was a 5% withdrawn.
I think it's similar.
Go ahead.
In terms of feeling, it's similar to when we had this commercial real estate issue, which is kind of ongoing. This is one of these things that isn't going to go away. Private credit being a disaster is going to be with us for the next 5 years. Correct. It's just not going to be the biggest thing that takes down bank. It's just going to be like, wow, we did some really dumb stuff there for 5 years. And now the chickens are coming home to roost.
Exactly. Speaking of chickens coming home to roost, let's switch gears before we get into the AI story, because we have a lot to talk about there too. We'll try wrap up in 12 minutes. Keep it to an hour. Big thank you again to J2. Links below for all these legends, including James Easton. Follow him and his charts on Twitter. And of course, Amanda's great newsletter and Marty Party, nonstop 24/7 posting. But what do people do right now? People are now concerned. I heard rumors of boots on the ground, which when I hear that, I go, what? In this day and age, that's not necessary. Let's not do that, please. Let smarter minds prevail. That would be catastrophic. That would be a prolonged war scenario that would result in a lot of money printing. Again, back to J2, former military guy. What's going to happen here? Is this going to drag on, or is it just people wave the white flag and get back to business?
If boots do end up on the ground, if they're not already, I think it's likely to drag on a little bit longer than people think. Because
what is longer? 3 months, 6 months?
It's so tough to say in these scenarios, because it could be that it could be a couple of months, or it could be 6 months. Hopefully not. But I think just with the slide up there, prolonged war scenario, what happens to just specifically crypto? I think with everything, you could see an initial pullback, as you would, uncertainty in markets just does cause that initial sell-off. But I'm of the firm believer, I think Bitcoin could perform quite well in the face of that. People would rush to protect themselves and use Bitcoin, but it just, Trump is going to want this wrapped up, in my opinion, fairly sharpish, especially with it being a midterm year. He's not going to want this being drawn out. So I'm leaning towards that. But it's just nice to have things in the back of your mind, just should the worst happen.
It's also very expensive. I read a report that Israel is spending $400 million a day on keeping planes in the air. $400 million. How much Bitcoin can you buy with that? Marty, long or short? And what's the impact on risk assets? That's the big question here.
The pertinent news, there was just if you look at the Qatari president's Twitter page, he just tweeted moments ago, America will withdraw from the battle as soon as we declare war on Iran, turning into an arms dealer, selling to both sides. It will deplete our resources to bring down both sides. Once both sides fall, it will be easy to achieve the Greater Israel Project. Our interest requires non-participation and letting them fight amongst themselves. I think this speaks to what the plan is. The plan is that, Iran's neighbors should take up this war and defend the region, and the US will try and pull back, become more of an arms dealer. Trump said 4 to 5 weeks. Israel saying up to a couple of months. We've got James iterating that as well. I think we're looking at least a month to 6 months until this ends, and I think it's all about UAE, Qatar, and other neighboring nations, actually picking it up and declaring war on Iran.
So back to the question, though, what does this mean for our risk assets? Do they stay in limbo for the next 3 or 4 months?
In my opinion, the printers are warming up big time, James.
Yep. Oh, I know that. But that takes time to trickle down to our risk assets, though. The Cantillon effect, the government officials get their pockets lined first. Mando, to you real quick. What happens to our risk assets if it is prolonged?
I think that there is obviously incentive to make a deal, but maybe not right now. I think Iran is clearly losing the military battle here, and the only thing it can do here is cause as much economic impact as possible, and it's going to continue to try to do that. So I think expect more attacks on oil and gas infrastructure in the Gulf. They need to make it a credible threat that even if they come to a deal, that you never want to attack Iran again. So they don't want to just necessarily do a deal right now. It's not like Venezuela as well. You can wipe out all of their military and all of their, even part of the theocracy, right? And they've managed to replace them. It's close to 100 million people. This is a huge country with an establishment. So I think that what we'll see here is in 2 months, they'll both be able to claim some form of a victory and a deal is done. I don't think this is a 6-month situation, but I think it will be, they're going to try and cause economic damage here because they're not winning the military war.
Yeah, good stuff. Let's flip to our final topics. This is an interesting one. We're going to talk about AI now because I believe AI is a monster narrative. The shovel maker, the godfather, many people believe, of AI, Jensen Huang, said, I think Tesla stock has the most advanced AI in the world. Huge for the guy making the shovels to say that. And he knows all the players across the board. That's the first thing that's big. But then space. Space is confusing people. I've spent a lot of time learning about space and radiation and protecting chips in the sky. A lot of people don't believe there will be space-based data centers for the next decade plus. I think in 5 years there will. And we already know there's people mining stuff up in the sky already and satellites. And there's NVIDIA chips up there as well, already processing. He already owns the internet network. So quick, round the horn, very fast. Mando, do you think there will be space-based data centers replacing the terrestrial ones? And in what time frame? 3 years, 5 years, 10 years?
I just follow what Elon's saying here. Like, he says it's going to be the cheapest place to do this, and he's the only person who could theoretically make it done. So if he thinks he can do it and it's going to be the cheapest, he's going to be the best one to judge here. And he said it in the next year, 18 months.
Yeah, I think 18 months to 2 years, yes. And he already just doubled his order with Samsung for AI6 chips, and apparently they're making them radiation proof. So he is definitely aggressive, and he doesn't sit on his hands. Marty, space-based data centers, how fast?
I think within 5 to 10 years. It's all about power, right? Solar, can solar support it? All of these small nuclear reactors, right?
There's 10,000 Starlink satellites in the sky. They're not plugged into anything. They're all solar. The question is...
I mean, you have to understand the hardware and power needs of running one of these AI inference centers.
Yeah.
But I think power will always remain the question. But 100%, I believe in Elon's word. I think he's building it right now, as well as running nodes of major blockchains, in my opinion.
Exactly. J2, space-based data centers, how long?
Yeah, space talk is largely out of my repertoire, so I'm going to agree with Elon on this.
I mean, it's a star cloud. Sorry.
Yeah. All right. This is well. Thank you for that. It's very important. People say, why don't you invest in biotech stocks? It's very important as an investor to know your limitations and know where your repertoire lies. Speaking of AI. Sorry.
One last thing. In his FCC filing in January, Musk, I remember, said he reckoned there'd be 1 million satellites. He called the project the Star Cloud, right? It's a multi-gigawatt orbital cluster, huge solar arrays. So Elon has a plan for this, and he has apostrophe 2027 in that FCC report.
And he also got approval. He got approval for these million satellites as well from the U.S. government, the FAA, or whoever runs that. Everybody's unplugging ChatGPT, and nobody in Silicon Valley here trusts Sam Altman. And there was Jason Calacanis ripped him a new one over the weekend. I thought it was kind of interesting. Basically, if you are a builder, if you are sharing any information with OpenAI, don't. Very dangerous. Everybody's unplugging their ChatGPT. This is Google Trends, and how to uninstall ChatGPT is the highest it's ever been. And we already know OpenAI ChatGPT is number 4 in the world. And we just heard as well that Microsoft, the big investor, they bought like half of OpenAI. They're now baking Anthropic's Claude into their Copilot for AI agent workflows. Microsoft Copilot, by the way, nobody uses it because it's garbage. But anyway, they're doing that. What do you make of all of this? Does OpenAI have legs left, or are they going to shrivel up and die? Because if they shrivel up and die, you have big players like the Oracles, the Amazons, the NVIDIAs losing a lot of money. Mando.
Yeah, look, I'm not a huge OpenAI fan, mainly because I think they're kind of a bit of a, not a one-trick pony, but they're a very high-risk strategy. I've much preferred other AI plays, and they're just raising at higher valuations while burning an unbelievable amount of money.
Yep.
So they're important for the AI infrastructure. I do think that story doesn't particularly maybe end in the best scenario unless they get into products very, very quickly, or devices very, very quickly, and start to generate free cash flow. So I'm not a big OpenAI fan. I think this was on the back of what happened with Anthropic, though, right? Like, you saw a lot of people when OpenAI gazumped Anthropic's deal with the government, they decided that OpenAI was in the pocket of the government and decided to uninstall. I am less on Anthropic's side there as well. So I don't know. I don't think this is the death knell for OpenAI. I think OpenAI's problems are because they burn tens of billions of dollars every single year.
That's true. And they've no path to profitability till 2029. Yeah. By that time, they'll be long forgotten, in my opinion. Marty, one sentence
with regards to OpenAI, I think at the end of the day, it was Tom Cunningham's comments. I mean, if anyone doesn't know, Tom Cunningham is pretty much like an AI god. He's a PhD from London School of Economics. He's the top economist and data scientist for OpenAI. And he made terrible comments about it and left. And I think since then, that was in late 2025. Since then, the sort of the internal dynamics of the company have changed. Developers are leaving, researchers are leaving. They're all moving to Anthropic, Meta, even Twitter. A lot of them have moved to Twitter. And then also when they started to turn on ads, I think that was turned people off as well.
Oh, big time. Yeah,
exactly. Ads on AI is a death sentence, just like Facebook ads. So I think those two combined, as well as, like you mentioned, the relationship with the US government and things like that. The ethos of AI and whether it's becoming centralized. And these are topics, as well as obviously Sam Altman's just personally, he's a very unlikable person.
Yeah, untrustworthy, and trust is everything in this space. J2, how do you use AI in your world?
Predominantly for either image creation or stress testing different theses. So if I'll get macro reports or different charts, you can just launch them into AI, stress test them, what would work, what wouldn't work. Just like that, really. I'm quite a basic user with it, to be honest. I'm not doing anything too crazy. I'm not running 50 agents and performing loads of tasks with it. I might be a bit behind the curve on that, but I just think for things like that, like I've just mentioned, really good. I'm sure it's really good for other stuff as well, but yeah, I am yet to delve too deeply into it. Maybe it's a trust issue.
Yeah. Cool. Appreciate that. There is one final thing I do want to share, and then we're going to wrap. Don't forget, links below for these legends. Stop screen and then share screen. It's always very difficult to do this. You got to stop something. And Marty, this is something you shared.
Okay.
You texted me. How
I love this.
How is government so wrong and so late all the time? So inflation is transitory. And by the way, that was 2021, not 2011. Subprime is contained. That's the right year. And AI risk to jobs is overstated from Chris Waller. They're completely missing the plot here. But more importantly, and this is kind of the scary thing, is this. I just made a list of all the, Jerome Powell, even David Sachs says job market's fine. AI is not having an impact. But 2026 job losses so far, massive. Pinterest, Reality Labs, ASML, Autodesk, Dow Jones, Salesforce, Workday, Square, letting off half their people, eBay, Morgan Stanley, 2,500 jobs, Amazon, 16,000 jobs, and Oracle rumored 30,000 jobs. And in fact, Amazon over the weekend had, I think, 2,800 engineers analyze everything that the company is doing from a developer perspective, plugging it into AI, and then they whack that entire team. Shocking out there. What's the quick take here? J2, is AI eating jobs?
Yes, I think it is. Was it Jack Dorsey laid off 30,000 people?
4,000.
4,000 was it?
Have to come 40%, right, of the staff.
40%, sorry, the numbers were off. But yeah, I think that just goes to show, and I think it's only going to increase as time goes on.
Yeah. Marty?
Yeah, absolutely. I mean, I think the government is just so wrong here, and that would be the canary in the coal mine, just that statement alone. But I mean, it's about what types of jobs. I think that's really, if you look at the Fred job openings, you can see it's finance and insurance right now has tanked to before COVID levels. I mean, we're talking hundreds of thousands of jobs every month now in the jobs report being lost to AI. And it makes a lot of sense at the end of the day. If I had a company paying hundreds of thousands to people that were just knowledge employees, in other words, I pay them for their knowledge, and I can simply, spend 500 tokens a month on AI and get 3 times the productivity, I would also lay them off. It's not personal, but yeah.
And there is a huge opportunity. If you are entrepreneurial and you have development chops, there is massive demand for companies that never had large IT departments before. Now, all of a sudden, they have the ability to hire one guy that can build 10 agents that can run their entire enterprise. That's a big opportunity for out there. So from that perspective, jobs will be created by those people leaning into AI and leveraging AI. Mando, to you, final word. True or not?
I think this is Friday. We got the jobs figure, right? And it was first time showing negative, and there was a revision of last month as well.
Yep.
I would say that if there's going to be any form of a macro sell-off, we're starting to see the foundations of it, which is we have job losses, and instead of them being able to print money, they're now up against oil prices going higher, and we have a wobble over the next 2 months around that. The idea we have job losses alongside high oil means that the response cannot be what we want it to be.
Yeah, this is where I get confused, because if you look at the Fed, their mandate is max employment and low inflation. AI is deflationary. That'll bring inflation down. Oil will drive it to the moon.
It'd be very simple if the oil spike hadn't happened, we'd all be sitting around saying, when are they going to print? When are they going to print? But the oil spike has happened. So this is why I think that stocks are not having a great period since then, particularly since Friday. And I think if there's going to be a sell-off, that will be the narrative. That will be the narrative.
Awesome. Thank you, guys. We'll try to keep this to an hour. Big thank you to J2, James Easton. Follow him below. And of course, Marty Party and Mando. That was an unusual video today, but we're trying to get to the heart of how to prepare for the next 3 months, 6 months. I think always have some cash on the sideline. We might get that big capitulation wick. If so, run into that burning building. Not financial advice. Any final one sentence word, J2?
Trade safe, keep the faith, stay bullish.
There you go. Yeah, and one important point there from J2 is bears are right 20% of the time. And this is the time where they're rejoicing and dancing on graves and everything else. But beware of that narrative, because narratives are all over the shop right now on Twitter. Mando, final thought for the week ahead?
Yeah, I don't know any bears who made money consistently. So I agree with that narrative. That you'd be bearish for periods. And then, but I think this is a buy the dip sort of scenario. I think it's very good that crypto is not falling out of bed here. It is back in the range. And remember, I said I only really like volume at the edges, same as CTO. So I don't think it's like some incredible trade right now, but it's good to see that crypto is outperforming.
It is. And the fundamentals are rock solid. Marty, final sentence from you.
Sure. Yeah, I think we're in a commodity super cycle, as we've seen gold, silver, now oil. And obviously we're at the dawn of Bitcoin officially being named a commodity. I think it'll be included in that pack. We're seeing the final shakeout. In my opinion, it's going to do the same exact thing. Raoul Pal will be right. I think we'll see the banana zone.
Awesome. Very bullish. I'm still expecting some type of a nasty capitulation event. Who knows when it's going to come or not, but we'll see. Big thank you to the mods in the chat. Links below for these legends. Thank you, Team Details of Cypher Sniper, Sean D, K8. See you all next week. Cheers for joining us, J2, as well. Have a good night,
Nice to meet
friends.
you. Great to see you.
Thanks for having me. Thank you.